Markets, the broker where you can trade every instrument with the most competitive spreads out there. Check it out, set up a demo. So the headline today is that Euro would need a close back over this 103.20, 103.50 to declare a bottom. I don't think that's going to happen on the first attempt. I think that we're going to get a little bit more, maybe 102-ish or so. And we do have the ECB this week. And if they disappoint, and even more importantly, what's going on with Nord Stream 1, already hearing about some force majeures from Gazprom. Although I do believe that if we get this rally, and as you can see, you know, we did not really diverge on the daily. On 4 hours we did, on the 4 hour we did. Right here, you see this low here was a divergence. I want to see one on the daily. So now if we head up, this RSI gets up towards 40 and we hang around and flush it one more time, maybe, you know, 100 or so points under the low of 99.5 last week, I would declare a bottom. And what I've been pointing out for the past several weeks is the inherent strength of the commodity currencies against the dollar. I've been talking about the Aussie, okay? The relative strength on the Aussie. Look at the daily here, pointed out how long we've been diverging. And we had this little throw over on Wednesday to, you know, take it back outside of the wedge formation. We're back in it. Close it back over 70, big round number is going to be very constructive. That's a breakout. What I would do is, if you're not long now, you're not late if you didn't buy at this day or at this low. A lot of people do that. I used to feel like, well, if I didn't short the top or buy the bottom, I'm late. So you, like I said last week, you could just hold your nose and buy it and you're doing okay. And I would say that support is at 67.5, that on some type of pullback, even if the dollar's making a new high, that perhaps the Aussie doesn't. And just to bring it home, I want to show you the Canadian weekly. Okay, so the Canadian weekly, well, let me show you the monthly. So everyone knows we're making new successive high after new successive high in the dollar. But check out Canada. It's only been a retrace bear market rally. Last week, it looked like we had a breakout over 131, which was negated. And just like the Aussie, on the other side of the world, Canada is showing relative strength. You look at this and you compare it to the euro, which has made 20-year lows, right? The Aussie held up in consolidation, almost had, we almost have a reversal month to the upside. And in Canada, pretty negative looking wick. I know we have 14 days left in the month, but I'd be surprised now. I think it could be short against a high around 132. You know, even though we went to 132, we didn't confirm on that time frame. We didn't even confirm on the 4, maybe the 2. Yeah, 2 hours. But I'd be a seller on rally if the dollar has another pop above last week's high. My preferred shorts as longs, as I've been saying, are the commodity currencies, and they're paired differently. So I'd be a seller in US dollar CAD up around 131, the false breakout, and I'd be a buyer in the Aussie at the wedge back down here at the wedge line around 67.38 if offered over the next several trading days. US dollar yen, I had put out that I wanted to be short, caught a couple scalps, and then we had this huge up day on Friday. Before that, I said I was looking for about 138, but it's not just the price, it's how it gets here. And I can't short a market that has confirmed highs on the 2 hour, on the 4 hour. The daily diverged under 70, so that's your first sign. 2 hour confirmed. So looks like we should get another high in US dollar yen. Maybe that means we're going to get some type of pullback in the bond market, which has had a pretty good run. In fact, we're getting that today on the TLT. So I'd be careful with bond longs because I only see 1, 2, maybe there's a third coming. So the same would pretty much apply with what we have here in the 10-year, and this is a confirmed high. So I don't know how long it's going to take, but I'd be looking for another push. Maybe it's going to be the Fed meeting. It's a week from Thursday. So we have 2 big central bank meetings here in the next 2 weeks, ECB this week, US Fed next week. Copper getting a nice bounce, bear market rally. You know, guys know I've been bearish copper and Freeport for a long time. Said to went out to our trade room, said you could buy it once we made a new low here. It's maybe a day early, but copper looks like at least a bounce before maybe we get another low. Same type of scenario that I'm looking for in euro. I think the metals will do the same thing. You know, we're getting a little bit of a pop in the gold market, and maybe it rallies back to 17.5. To me, it looks like we have to clean out all the bulls. Let me show you the weekly right here. Shows on the monthly under 1680, and then you have 50 week at 1627. So what we could end up having is, let me look at the weekly, is some kind of shakeout stop hunt. You know, consider this like the 103.50 line in euro, and we clean out these stops and then look for the possibility of a low in the 1620, 1630 level. And to make it look good, it'd be nice to have the RSI pop here for a while, build some momentum to the upside, and then have one final flush. Think the same thing could happen in silver. The only thing I think that works in the advantage of silver right now is potential of a top in the gold silver ratio. As you could tell on the daily, we diverge. We only have 2. So we could get another one up here, maybe towards 95. But I think that when you look at this longer term, that this too is a bear market rally after the straight line drop from 130 to 60. We almost got to the 50% level, which, you know, as weak as silver was, taking out the lows, to me, this says that I should be looking to buy silver, sell gold on the ratio here coming up at this 50% level, because in my career, the reversion to the mean would be down around the 45 to 40 level, which means another wave is coming, even if we have one more pop here. Here's one I missed last week when I was on with you guys. I think it was Wednesday. We were taking out the 61.8 level right here, and I thought we were going to head lower. Of course, we had the reversal. Now we're knocking on the door again, and you have to go with the fact that the even if we get pullbacks, the move to 4,100 should be in play. There's going to be a big debate. Should we be able to recover towards 4,200? The bears are going to have a hard time justifying shorts. Once we get up here, then they'll say 4,400. So 4,200 is more important to me than 41. I know we had some pokes and wicks down there, but I'm thinking 4,100, and then the bull bear battle begins on the S&Ps. Even the Russell, I thought that we might have one more drive, a third drive to a bottom. See, we had 1, we have 2. And could it still happen? Yeah, but a lower probability the way the market acted last week. So I know I teach 3 drives, but I could name hundreds of examples where it only took 2. So that's why if you use my methodology, you may not have bought this, but you would have covered all shorts on the divergence. So I teach that the first non-confirmation is a cover if you were short or if you were long and we're diverging at the highs. So it's at least a cover. So equities look higher. I don't know, maybe we're going to run throughout the summer into September. Let's really, you know, I know people usually remember things I've noticed when I'm wrong than when I'm right, but the low in the S&Ps really happened on the solstice, okay? And that was it. So the summer runs until late September. So let's see what we could do. I was thinking we were going to have an everything rally. Stocks, what hasn't joined the parade would be the dollar coming down, the metals rallying, and we'll see what happens with that. Something of interest that happened last week in the energy complex was that we challenged this major breakdown here. This was supposed to be a big breakdown under 94. But the sneaky ARBs and black boxes turned it into a stop hunt. So to me, it looks like we're going to try 110 again, maybe 114. You know, maybe this is just going to turn out to be another bull move. And I would say that they cleaned out. Plenty of longs got freaked out under 94. So right now it's an I don't know, but I don't want to be short. If gun to head, be long under 94. Just want to take a look at how some of the shares are acting here. Also, Bitcoin reassociating itself with risk, put in a decent week. Looks like it wants to come out of the hole, but more than that, what I discovered on the last break is that Ethereum led it on the way down, and now it's leading it on the way up. You see how Ethereum has cleared its 50-day while Bitcoin's still underneath it. So if you want to be long crypto, the leaders Ethereum already had over almost a $500 bounce. So Ethereum looking good. I wouldn't be short. Okay. So the preferred long in crypto right here is Ethereum, wrong under $1,000. And I think that's about it. Covered all the currencies and the metals. You know, despite how bad silver looks, what do you guys think of this chart? Cover up the title. So silver got washed out way under the lows here, right? And we just barely made new lows on this silver, creaming all the way down to 18. Same with this. Okay. And some of the gold stocks aren't acting bad. So we need this rally in the shares so that if there is one more washout, I'm thinking in gold that, you know, 1630, like I showed you earlier, and maybe silver could take out recent lows and trade down to 1750. And maybe the shares won't make new lows after that happens. And that's really going to be a strong market signal. You know, in these summer markets, don't forget to always take partial profits. That position trading is great, but you want to get paid. So the way you get paid is taking partials, moving up stops. If you have the opportunity to put your full position back on at a great technical level, you do. You lay out. If you covered shorts, you lay them back out on a rally. If you've covered longs, you buy the next dip and stay with your core position. So Mike's going to be here today in an hour and 20 minutes. And, you know, he really handled that Tuesday like a champion. I didn't see Mike waver at all when the S&Ps were flushing through this 61.8 level. He was still buying stuff. And, you know, you just take a simple arithmetic count, 36, 35, and call it 270 or 260, and that's going to get you up towards 41.5, 42. I think that's destiny in the market. And I think it may also take a little weakening in the dollar. If you notice, once a dollar weakened, the stock market also got a little bit of a lift, take some of the pressure off the multinationals. A strong dollar is hurting earnings on the currency translation. And I'd be very alert now with the yen. You know, I'm not saying short it. I don't know if I would be long, because I think we're getting close to where there could be some type of intervention coming here in the end, and I think it's going to take the Fed to join the BOJ to have some impact. So be careful. We haven't seen an intervention in a while. And my friend Luke Roman says that, you know, the Fed said they could buy anything and foreign instruments as well legally. So why not come in and buy some yen? Be a good trade for them anyway, don't you think? So I invite everyone to join us here. TradeGATEHub, invite you to open a demo with TradeView and check out, you know, a great broker that services people outside the US. And tune in for Mike and see what he's still thinking. Maybe he's going to be booking some stuff. Knowing Mike, he does trade along the way off his positions, and you know, having to move like this and the S&Ps in a week, I know Mike will probably be going to the door on a few things. Tune in to find out what his strategy is for today's update in equities. And remember, more than that, don't just count your currencies and your bars and your coins and your certificates. Count your blessings. I'll be back with you tomorrow with Mike, and our Tuesday chats are starting to be widely followed because 1 + 1 = 11 when Mike and I get together. Good hunting the rest of the day. Dale Pinkert at TradeGATEHub, powered by TradeView Markets. Adios.